Welcome to the Crimson Network. I'm your host. Today we're talking finance. We're talking about the Fed. We're talking about interest rates. We're talking about the stock market. So sit back, relax, and learn a little something. These videos are primarily for my son. One day he can come pick up a tidbit here or two. But yeah, we're going to talk about some things. This video is really in response. Today is February 28, 2022. The what? Around a month or two ago, maybe the top of the year, the Fed announced that they're going to be raising rates. That to me was the first domino of many dominoes around a strategic pullback on the stock market. We've seen this before. We saw this right after the 2009 collapse when the economy got pumped with the crazy stimulus. We saw stocks taking off. I mean, just shooting off. Citigroup, $1. They have 59 right now. Manipulation, things happen, but I'm talking about 50x on the return. Just crazy jumps. All of a sudden, like the comet came, like an asteroid came for the dinosaurs. Just smashed it. What was it? It was the Fed raising rates. Halted all of the growth. And so for the longest, I took a note of that. I think I had just got out of college in 2007, so I was 24. The Luce was not where it needed to be. The stack was not tall yet. So I couldn't really step on it and do no work. I had to just watch. But here's the first lesson, son. World, YouTube. If you can't get in the game, learn the game. If you cannot play the game, learn the game. All right? Take note of everything that you think is relevant. When did the stocks go up? What was the news that happened when it went up? What was the news trending to get it to go down? What was the news trending that got it to go back up? What key sectors went up and when? Which went up first? Which were the leading indicators? Which ones lagged? Which ones never went up? Which ones weren't affected by everything that's going on? All of those things you can take into account because this will happen again. It's a system. It's a game. It's meant to be, it's like a seesaw. It's the people versus the bank. With business somewhere in between. So you got to understand this game it's meant to be played, but you could watch a chess master and learn the moves. And you can just go over there and imitate them and they're going to say that boy nice. So look at what's happening. If you see a major time period that you wish you would have jumped on, again, just figure it out. Figure how you would have jumped on it. Run those numbers. Key your joint in, and then run that same formula the next time. So for me, the Fed raising rates is a major indicator. I recently read an article that said they may raise it multiple times within the year. It's about to be shaky warrior in 2022. But with every kind of axing, it's almost like pruning trees, or I don't know if that's the right word, whatever, where you got to cut the dead away to really see what's real out here. Money, when the Fed's rates are low, the money's flowing. Money's flowing. In a normal state, this is not real numbers, I'm just throwing it out there. If I give you $1, you got to give me back 2. When in this state of historically low, let's just say right now they're saying, if I give you $1, you just got to give me back $1.05. Just put a little extra 5 up on it and we good to go. That's all they asking for. And so you can easily pay that back. The ability to pay that back is much more possible. So the best of the best are getting it, but also some of the worst are getting it. And so, when you hear about all these companies, or you hear about all the, you go on IG and you got the business coaches who will tell you how to get a $50,000 loan from the bank, and, you get 2 business credit cards and blah-zee, woozy, woo. That's what they're reeling back in. Now, they say it's to curb inflation. That's for a whole nother topic. We won't really go there. I don't know too much on inflation versus interest rates, but I guess there's some kind of balance. We'll talk about that later when I get it right. But right here, what I do know is inflation rates, stocks. Inflation rates, stocks. Why? For me, I think now on a very more higher scale, I think this is an attack on the general investor, that the layperson, the average investor, not the certified one, not the one that's making the big bank that they can count on. No, I'm talking about the ones like you and I, regular job, might own a small business, what have you, but we don't have the real cheese. But they realize, wait, they've got expendable cash. They invested in AMC. They've done those kinds of things, and they saw the power. They said, wait, we got to get that back. They're seeing the power of crypto. New millionaires coming up left and right outside of the system. They're already going to put regulations on that. That's a whole nother discussion. But in the grander scheme of things, they're like, they don't need that money. Inflation went up some way, somehow. The cost of goods over the course of a year, a pandemic year at that. Now, they'll blame it on the pandemic, yeah. But the cost done went up. Costs have been, and I'm talking about across the board on everything. They're seeing these people flipping houses. They're seeing people get into all these games, and they say, y'all have money. Oh, y'all got money. They see the money in the stock market, the Robin Hoods of the world, the fractional investors of the world. Oh, we in there. They gave y'all the way. It's almost like a trap. They gave you the means to get into the market only to pull the rug from you because the rates were historically low, so we saw inflated rise or unrealistic rise. Are these companies worth what they really are, what the market says they're worth? That will be determined over the course of this thing. Because now the businesses will have to go to the banks, right? And now they got to prove that they can make $2 versus making just $1.05 off that $1. Some will crash and burn. The good will rise to the top.